it was frankly quite a muddle of words, but the BOJ on Friday effectively raised the 10-year yield ceiling on its YCC policy. This change that happened a bit earlier than we were expecting and occurred even though the bank last week didn't raise its formal inflation targets. However, the bank did change its assessment of the outlook for inflation, saying that risks this year and next are now to the upside. That's important, given we have been worried the labour market recovery in Japan isn't yet so convincing. In this context, labour market tightening could now be the next shoe to fall. If unemployment now does start to decline, which still remains likely, the BOJ will probably have to raise its formal inflation forecast, which in turn will probably put more upwards pressure on rates. First of all, what happened on Friday? The BOJ's communication has once again come in for some flack. It already had two guidelines for 10-year rates. First, to keep them around zero, and second, to allow them to move in a range of 50 basis points around that central target. Without changing either of those, it's now added a third, offering to purchase 10-year JGBs at 1% every business day through fixed-rate purchase operations. It didn't spell out in the statement exactly what that meant, but effectively it means the new upper ceiling for the YCC is now 1%. This patchwork of rules isn't ideal, though frankly it's par for the course for the BOJ in the last few years, with policy having a wide mix of targets which aren't always very easy to reconcile. In terms of actual yields, the 10-year yield broke through 0.5% on Friday, but didn't continue surging upwards. It did rise again today, and the BOJ in response stepped in with an unscheduled bond buying operation of 300 billion yen. So it clearly doesn't want yields rising too quickly. But so far, this doesn't look like anything like the market pressure that occurred around the technical change made to the YCC in December 2022. That's when the BOJ had to spend enormous amounts to defend the 0.5% ceiling. Second, what is the BOJ thinking around this? Now, in making this latest shift, the BOJ is clearly hedging its bets, and that's understandable. Japan has been in or near deflation for 30 years, a period punctuated by two premature tightening efforts by the central bank. The BOJ will therefore be keen to avoid making a mistake for a third time. Friday's statement again repeated the line that the bank will patiently continue with monetary easing. It would be easier to think that a mistake can be avoided if the BOJ had a strong sense of just what's going on. But instead, the bank continues to stress that there are extremely high uncertainties for Japan's economic activity and for prices. This explains why the BOJ went to some lengths on Friday to underplay the extent of its changes, and why we ended up with this quite confused statement. The uncertainties warrant some flexibility in policy, but the bank argues that until inflation is at 2% and rising, it doesn't need to tighten. At least in its formal forecast, the bank isn't at 2%. It did raise its forecast for CPI for the current year to 3.2%, but it kept its outlooks for 24 and 25 unchanged at 1.7 and 1.8% respectively. That there wasn't enough evidence yet, with the major missing ingredient being renewed labour market tightening, to say that the 2% target had been reached, was the reason why, at least for us, we thought that the optimal time for any BOJ move was still a little way off. To be frank, this stress on the labour market actually doesn't feel very consistent with BOJ thinking. In addition to the obvious fact that the bank did indeed move on policy, it also rejigged its assessment of the risks, arguing that for prices, they are now skewed to the upside. This is an important change, suggesting that it's more likely that the CPI forecast moves up over the course of the next few months than down. And that does indeed seem to be the trend. Before 2020, a forecast for inflation made by the BOJ in any particular year would be announced and then progressively cut, as inflation always undershot. Since 2020, initial forecasts have proved too low, with major upwards revisions having to be made subsequently. Now, of course, in this, the BOJ isn't alone in the world. Lots of other central banks are in the same position. But that in itself is noteworthy, because for a long time, Japan's inflation experience was unique. Moreover, the BOJ does seem somewhat confident that the labour market is looking inflationary, saying that signs of change have been seen in firms' wage and price setting behaviour. Indeed, the suggestion on Friday was that labour market developments are one of the reasons the risks around inflation have changed to the upside. So where does this leave us? Well, the fact that the bank was willing to move policy at all is clearly a sign that it does have some confidence in the outlook, and that should be positive for risk assets. But the BOJ will continue to face a very difficult time communicating with the markets and managing the YCC from here. From a cyclical perspective, it seems that the labour market tightening that we expect to happen over the course of the next few months will be a trigger to push up the BOJ's formal assessment of inflation. In terms of the structure, even now the bank's longer-term inflation forecasts are quite near to 2%. With GDP growth running at perhaps 1 to 2%, it would seem that even today yields of around 1% would still be very low. As before, for more information on all of the economies of East Asia, from China, Japan, Korea and Taiwan, please look at our website, eastasiaecon.com, where you'll see a whole selection of curated charts as well as all the data on these economies. Thanks very much.